Happy New Year. It is January 1st, 2012, and this will be a market update with an in-depth look at whipsaws and how it's prevalent for today. Oil, gold, and silver have corresponding whipsaws, so we will examine them technically and then go into microeconomic information to evaluate the situation. I should start off with gold for all you gold bugs. Always remember when charting to grasp an idea of the long term. Long-term trends are more prevalent than short-term waves. When examining the long term, we find that the next trend line of strong support contains a possible whipsaw. Whipsaws are false breaks of trends that's normally random activity that's not part of the driver of cyclic activity, which through the principle of summation makes trend lines and wave patterns. Valuations in spot gold is expected to approach the unconfirmed 2005 long-term trend line that contains a whipsaw. Now we will zoom in to the 10-day intraday chart that's outlined on black to get a closer inspection of the approach to the 2005 trend line. Gold has been on a downtrend since August, and recently it has formed a second accelerate downtrend off its most recent turn downward. So for any hope of an upswing, it must break through these three resistance barriers that I have outlined in red. For now, we look for support. Support and resistance reverse roles after trend breaks. After spot gold has recently broke its third accelerate uptrend, it has found support twice on its old resistance lines, becoming support. Now we will zoom into the intraday to get a closer inspection by looking at the 10-day, 15-minute interval intraday chart. The mechanics of whipsaws, trend breaks, and support becoming resistance work as well in the short term as it works in the long term. But always remember when looking at the short term to always keep in mind of where the long-term trend lines are, because they are more prevalent. The recent price action in the short term is going to turn out to be a whipsaw one way or another. If support holds, then the area outlined in black would have been considered a whipsaw. If it do not hold, then the area outlined in black here would be considered a whipsaw. So the price action on the coming day will be the telling sign. There is multiple support levels from resistance becoming support that valuations can bounce on and bounce between while it's on its way to the 2005 long-term uptrend if prices go that direction. Otherwise, if it breaks through the 2005 uptrend on the downside, you have to look for the next support levels in the longer term trend. The reason for the focus on the 2005 uptrend that contains a whipsaw is because this phenomena has occurred in silver and in oil. So the purpose of this video is to display whipsaws and to do an intermarket analysis on gold, silver, and oil. Now we're going to take a look at silver for a technical inspection. As with gold or any other chart pattern, you always want to examine the long term first and then zoom in to shorter durations. When examining the long term, we can see, as with gold, silver as well has an uptrend that has been in place since 2005 that contains a whipsaw in 2008. Silver, since the springtime, has been on a corrective downtrend of its uptrend that has been in play for several years. Silver is on its second accelerate in its downtrend, and as with gold, is expected to approach its 2005 long-term uptrend that contains whipsaw. Now for a quick look at the intraday mechanics. The mechanics of intraday charts work the same as the long-term charts. As you can see, in the short term, silver had bottomed, found a new uptrend, and broke its uptrend, seemingly on the way back down towards one of its longer-term supports. Now we will take a look at the commodity of the New World Order, oil. Oil, just with gold and silver, has been on a strong uptrend for many years. The oil uptrend has been in play longer than the silver and the gold uptrend by a few years. What's noticeable is in 2008, oil contains the same phenomena that occurred in gold and silver, and that is a whipsaw. The downtrend in oil has been in play since 2008, with the long-term uptrend that contains a whipsaw in 2008 combined with the downtrend that started in 2008 forming a resistance line. You have a possible continuation triangle pattern in crude oil. For now, I will zoom in to a shorter time frame using a daily chart to get a better idea of where price actions will probably head in the near term. In the daily chart, prices have formed a triple top, signaling that in the short run, prices might decline over the short term. Since prices seem to be declining in the short term, it motivates me to look at the long-term trend line that contains a whipsaw that also have the same phenomena occurring in gold and silver as well. Whipsaws are false trend breaks that gives false signals. So therefore, since it is displayed in the long-term charts prevalent in commodities, it's a tall tale signal that something either fundamentally changed if the whipsaw supports don't hold, or that sentiment has changed due to false expectations in economic projections. In 2008, the global economy found itself in a predicament, particularly in the United States, in a mix-up of asset and debt bubbles, a widening inequality gap with the bottom falling and the top rising, a scare of coming inflation, a decreasing consumer confidence, which are all signs of major instability which led them to do their bank bailouts, Emergency Economic Stabilization Act of 2008, and quantitative easing, which is all life support for the United States and global economy. And the majority of both parties in the United States passed these measures regardless of the disapproval from a conglomerate of economists and a multitude of protests. So, since they has accumulated all this debt in trying to save the global economy, particularly the United States economy, from a collapse of a liquidity trap. Are banks lending? Has foreclosure stopped? Did consumer confidence go back to historic levels? How is the housing market? Has home values rose? What unemployment look like? Why are there a record number of people on food stamps? Did the emergency operation heal the economy, or is it just life support that prolongs the inevitable or make it worse when it comes? Normally, you would expect that a nation with such an aggressive monetary policy that we are pursuing here in the United States would already show major signs of inflation or already have gone through hyperinflation. What is preventing that from occurring? In the United States, we are a nation that imports goods to satisfy our high standard of living. But over the years, particularly the last recent years, our main export has been inflation. And we maintain this export of inflation through the international world order of the petrodollar. But this petrodollar will not last forever. Situations in supply and demand factors, plus the inevitable depletion of oil, will lead us to a situation where we will have to go on another world order. But for now, the petrodollar is the standard. We will see what happens if oil starts to approach that $150 mark once again. Inevitably, the nation will have to choose between deflation or inflation, which it seems like they have already chosen the inflation route.